Hello everyone, this is Paul from the APNacademy, and in today's video we're going to be looking at why most traders who use trend lines are failing to make money or to become profitable while using the trend lines. Now, this makes most of them to come to a conclusion that trend lines do not work. I get a lot of false breakouts and all that. But what causes all this? We have about 6 reasons. And after this video, if you can avoid those 6 reasons or you can correct the mistakes you've been doing, we're going to go through each one of them, and you're going to realize that at least you've been making 1 or more than 2 from the list of the 6, right? So we're going to go through one by one, while I'll be showing examples or practical live examples on the chart, and you see exactly what most of you are doing. If you can avoid them, then your trend line will be correct. But the moment you still use them the way that lie in the 6 reasons, your trend line will never work. This one I'm speaking from experience, and I know what I am telling you, right? So before we can continue, in case you've just come across this channel, please hit that subscribe button so you don't miss out information just like this. We make videos every week that can help your trading journey. So let's start with the very first one. Which one is the very first one that makes your trend lines not to work? The very first one is that most traders who are trading using the trend line strategy, the way most people call it, or traders who are implementing the trend lines, why their trend lines are not working is we are stuck, or they are stuck with the tradition of wicks. What do I mean by the tradition of wicks, right? Which is actually wrong. What do I mean? We all know that trend lines are drawn by 2 turning points. For example, if the market is trending upwards, I need at least this turning point and this turning point, and we properly know that we're going to draw them in the candlestick chart. Now, what most traders are doing is that they are focusing on the wicks. For example, we know that we're supposed to use, in case I'm drawing the up one, this is an uptrend, so I want to draw a trend line, a support trend line below here. So I know we're going to use the first turning point. This is the first one, then plus the second one. Then we connect a diagonal line through, making it our trend line. Now, the rules are, 1, you're supposed to use the lowest wick for this case. If it was a resistance trend line, we're supposed to use the highest wick in this standing point. Then what I mean by this statement is most traders are focusing on also at getting a wick here. Let's say we have like 3 candles. They're looking at getting the lowest wick here, which is very wrong. That's what I mean by the wrong tradition of wicks. This is what is letting most traders down, one of the reasons, right? Now, what are you supposed to do in order to avoid this is, 1, you're supposed to start correctly with the lowest wick here on the first turning point that you have identified. Then when it comes to this second turning point here, you're supposed to cut through as many wicks as possible. Remember that this line that you're drawing is not what is actually holding price. There are many things that do hold price. Especially if you're trading currencies. For example, we have inflation, we have GDP of those economies of the currencies that you're trading, that make up the currency pairs that you're trading. So it's not this trend line that you're drawing that is going to make price stop there or not to move up or move down. So we are looking at the best fit, the best possible fit, which can at least give us areas of interest or areas of entry that we can align with our rules and we can take trades, right? So these lines that we're drawing are not the ones that are holding price for us, right? That is one. So let me show you this practically on the chart so that you can see the mistake that you've been doing, right? So let's just head straight to the chart. Okay, so I am on my chart and I'm using my MetaTrader 5 platform. There are many platforms that you can use, but I'm using my MetaTrader 5 platform. So, and I'm going to be giving an example on what we call volatility 75 index. Now, if you don't know what volatility 75 index is, is a synthetic index which runs 24/7. You can also trade it over the weekends. And if you do not have an account to trade it, I'm just going to leave the link in the description so that you can get yourself an account. Start with a demo account, practice it. It's a very, very good instrument or security that you can trade. So let's take an example of what I've been explaining in the first point that is making your trend line not work. You can use any time frame because it doesn't matter as long as using the correct principle the trend line should be able to be applied in any time frame. So we can choose any time frame. We can start from monthly, right? Let's start from monthly. For example, this is my monthly. I can see that the market is in an uptrend, making higher highs and higher lows, right? So I'm going to pick any point that I would like to draw my trend line. So I'm going to identify my point, my first point as this one, and my second area as this one here. Remember, we said we need just 2 turning points, or you can say 2 or more turning points, right? Now, let's put our trend line on this chart, and then I'm going to show you, I'm going to first start with the way most of you are drawing, and then I'll show you the correct way to draw it. Now, you can clearly see that here we have a week, and then here we have very many weeks, right? Around this area here. Now, what most people are doing is they're going to connect this first low week and then this second one here. Are you seeing? They're going to connect this first one, which most times most traders do correctly. But when it comes to the second one, that's why the problems start. They're looking out for this week here, the lowest week. They want to look for a week that is standing out, which is not correct. You're not looking for perfection in the market, because the line you're drawing is not what is going to hold price. Are we together? Price is moved by a number of factors, not just the lines or the tools we're using to do analysis, right? So what's the correct way of drawing this trend line, right? This trend line is like I mentioned when we're on the theory part side on my presentation. You are supposed to be looking for the trend line cutting through as many weeks as possible. Try your best, but without cutting the candlestick body. So if I am to draw my trend line like this, I'm going to try my best to cut through as many weeks as possible on the second point, right? But not cutting through the candlestick body. Now, I just want you to observe what I did here. The first one, you can see I touched the week, the lowest week. Then on the second one, I tried my best to touch this week, I touched this week. Then you can clearly see that now the market also is giving me a third touch. It's giving me a fourth touch. Even where the current market is, I am getting a touch. Are you getting it? Now let's try to go even to the lower time frame using this very trend line. You will see that I will just need a slight work to adjust it. I'm in monthly, we can drop down to weekly. Now, can you see the result you have in weekly? You have a number of touches that you're getting, right? Even if you drop down to daily, still, there will be some slight, you're not going to be so much off track, right? This is one of the ways you can realize that actually what I've drawn is making sense, or it's holding out most of the points in the market, and I can be able to depend on it, right? So that's the first point, that's making your trend line is not correct or lack accuracy. The moment you can improve on this, you're going to see results, right? But if you keep drawing it the first way I've shown you, your trend lines will never work and you always keep complaining, right? So now let's go to the point number 2. Let me first explain it, and we come back to the chart. Okay, so we have explained our first point, and we now understand what we're supposed to do with the first one. Do not stick to that tradition, which most of you have been reading in the books, right? Now, what is our second one? Our second one is ignoring lows and highs, and of which most of us do not know how to identify lows and highs, or what you guys are calling swing highs and swing lows. Most of you know how to give them nice names, but you do not know actually what makes these swing lows, right? Now, I'm just going to give you a brief hint on them, because we have a whole video about how to correctly identify highs and lows. You can just search amongst our videos and you'll be able to find it. Now, we all know that when we are studying, we see these things in books, and most of the videos we've watched, we're creating higher highs, higher lows, higher highs, higher lows, or we're creating lower lows, lower highs, lower lows, lower highs, lower lows. Mentioning it is easy, but actually we know that this is not how the chart moves. When you go to the chart, this is not how smooth price is moving, right? Price is not moving as smooth as this, like this. But as the market is coming down to make this, to make this low here, as price is coming down to make this low, there are very many turning points it is creating here, right? If you've been trading, you've noticed that when it's making this low, there are very many turning points to come down here by the time it's making this. Even if it's making this low high, there are very many ups and downs it is making. It's very rare that it's going to move up smoothly like this, move up and down smoothly like this. The same applies when it's making this high here on the uptrend. There are very many ups and downs going to make. The same applies when it's making this higher low. There are very many like that. That's how the market moves. It's not perfect the way we illustrate when doing theory, right? Now, briefly, how are you supposed to identify correctly the highs and lows? You're supposed to,
For example, if the market went up, created a minor push down, then it continued up, then it created a major push down, right? In this case, which one are you going to select as your high? Do not select this first one as your high, because here sellers did not show their presence, right? Yes, it is a structure, it's a turning point. Please, swing lows and swing highs have a slight difference with what we call structure. Swing highs and swing lows are structures, but there are some that are just minor structures that you're supposed to just consider as structures, not as swing highs and swing lows. For example, this can act as structure, but it cannot be your swing high. Why? Because the significance or the momentum of this push down here was not strong. So we're going to consider this one here, right? So you'll mark it. We're going to see this correctly on the chart. And then when the market again takes out this high here, then you can be able to have a swing low, right? Why? Because this is the significant push that the sellers showed us in the market. So we shall have our high, our low. Then also here, as the market is moving, we have to use the same procedure, identify our high using the same procedure I've showed you. But in case you do not get it properly here, we have a whole video on it, right? I don't want to make this video long. I just want to show you briefly. If you don't understand how to identify swing lows and swing highs correctly, because most of us tend to actually take bad entries because of this aspect, right? Now, what do I mean by ignoring lows and highs when drawing trend lines is this. For example, I'm assuming you know how to correctly identify your lows and highs. If the market is on a downtrend, we create this first turning point. I'm assuming this is your first turning point. And then we come and create this second turning point, right? Now, I want you to observe as the market is coming up, it's creating lows and highs, right? Now, also, this is your first turning point, this is your second turning point. We have said that we consider turning points to draw a trend line. Now, I will connect like this, my turning points. And then remember, we are interested in taking our trade on the third touch point here. Now, we have sometimes scenarios whereby this low here is slightly above the trend line, right? Let me just take it slightly back. This previous low here, the previous low is slightly above the trend line, whereby we have price coming to make the third touch here, but does not perfectly stop here, right? Now, market makers have understood the situation or the scenario of how most traders like perfection, sniper entries, and all that. What will they do? They'll instead come and retest this previous low area here. They'll just stretch the price a bit into this area. And then most people will think it is a breakout. And what will the market maker do? When the market maker comes back onto this trend line, it will give you some reaction like a retest, and then you people will buy. It will give you a small buy and then break back below, retest this trend line, and then continue down. Are we together? So this is another reason why most people are losing money and saying that trend lines do not work, or most people suffering with trend lines and making them not consistent. Now, let me just show you this aspect on the chart, and then you will be able to see exactly what I mean by you're ignoring the lows and highs when dealing with trend lines, right? Let's just head over to our chart. Okay, in this example, I'm going to give you a practical example on volatility 50 index. I'm in a monthly chart, but I would like us now to change the time frame. Let's go to maybe an entry time frame so that we can see, because mostly we consider the lows and highs in entry time frames when we're going to take our trades. We'd like to take our trades at previous lows or previous highs because they give us a better risk to reward ratio. Now, I like taking my trades in H4, so I'm going to use H4 as my example. Now, we can clearly see that the market created this high here and then gave us this swing low here, right? Now, here also the market gave us a low, of course. The market gave us a low, then tried to push up, but I would not consider this turning point. The market came back and gave a new low here and then gave at least a significant push up. So I would better consider this as a low, and then also I would consider this as a low. But for the purpose of keeping the video short, I'm not going to mark everything. I'm going to mark this low, and then I'll also mark this low. In this case, the market again created this push down. So it created this low, pushed up, but this push up is not as significant as the push down, the push up when the market came here and gave us this push. This push shows at least buyers are a bit stronger in the market. So I'm going to consider this low here, right? So let me just mark my lows, and then I'm going to draw my trend line, right? So I have this low that I'm considering. Then I also have this low here that I'm considering, right? So now let's draw our trend line. I'm assuming that you're going to draw your trend line from this standing point here. So let's follow the rules. Highest standing point, then do not connect your trend line like this. I know sometimes it's going to give you this accuracy, but do not do it like that, right? To get proper accuracy, you're supposed to draw your trend line like this, right? Connect as many wicks as possible on the second turning point, right? So in this case here, the market came. Now, most people would see like the market broke out and gave like a small retest to this structure here. This is how people would be trading. They would be thinking that the market came and gave us a retest to this structure here. So people would be buying, and you can clearly see what happened here, right? What did the market do? Instead, this reaction here of crossing this trend line slightly is because it's trying to retest this area and then push down. There's a possibility it can also continue up, but for us to be able to buy this, we needed to break this previous low, because this is a previous low, or what we call a swing low. The market created this high, a lower high, then created this low here, created a lower high, created a low, right? Then it's retesting a lower high. So for us to say that the market is changing trend or trying to start buying, is we needed to cross this previous low. Are we together? So that's another mistake that trendline traders do make. And if you avoid this, you'll see your levels of accuracy going up, right? So let's continue with our points that make our trend lines not correct, right? Okay, so let's look at the third one, the third reason. We said we have about 6, so we are still continuing. Now, what is our third one? Our third one is ignoring that the fact market makers do create minor trends within the major trends that we have identified as traders. What do I mean by this? The market usually, when this is your trend line that you have identified, the market is making higher highs and higher lows, coming back to touch your trend line. Now, in the process of the market creating this high, right? This is the main move. We're creating higher highs and higher lows. We're creating these higher highs and higher lows, higher highs and higher lows. Now we are forgetting that as the market is coming back to touch your trend line, the market is creating a minor trend. Sometimes it's going to be steep, but sometimes it's not going to be steep. It's going to really give you a trend. What I mean by steep is sometimes the markets will be making aggressive candles, small retest, and then aggressive candles, right? But the more, if you want to identify that type of aggressive movement, is if there's a trend really there, you can drop to the next lower time frame. For example, if you're in daily, drop to H4 and you can be able to see that there's a trend. Or you can even go further to H1. You'll be able to see that there's a trend in this aggressive retest to this trend line here. Now, this is what I mean that you're ignoring minor trends within the major trend. And how is it costing you as a trader? Yes, you know that you want to take your trade on this third touch point. Let me just draw it clearly. Let's assume this is your uptrend. This is our first touch point that we connected. The second touch point. Then the third touch point, as the market is coming down, it's giving you a trend, right? Now, what most people are ignoring is that as it is giving you a trend, it's also giving you a minor trend line that is acting as a resistance. Are we together? Now, we tend to ignore this minor trend, yet it can also affect the market. Remember, I told you guys when we're starting this video that these lines we are drawing, all these levels we are drawing, are not the ones that are holding price. Price is determined by very, very many factors, right? So the lines that you're drawing could not be the right one, or the line that you're drawing could be actually aligning with the reasons that do determine price, right? So make sure you are putting all these factors into consideration. For example, this market can come, after touching here, the market can come and touch this minor trend line and then breaks below and then continues with a downtrend. Are we together? So make sure you're considering this minor trend within this trend of yours, so that if you want to take this, let's say you want to continue with the buy, so your first touch, second touch, and third touch. Of course, we know that the third touch is important to us because it's where we'd like to take our trade in case we are continuing with the trade. Now, how would you treat this? You want the price to break above, and then you can consider that now I am at support, and then I can continue. right? So let's just try to look at this on our chart practically so that you can understand exactly what I do mean by this, right? Let's head over to our chart. Okay, so for this point, I'm using again volatility 75 index. And once again, if you do not have an account for trading synthetic indices, make sure you get one. I'm just going to leave the link in the description. You can get yourself a demo and start practicing and understanding them better. Now, let me identify a trend in weekly, right? Let me identify a trend in weekly. I'm going to identify, I want to take a trend in this because I have identified this turning point, this turning point. Now, once again, just as a reminder, do not draw your trend lines like this, right? Touching this lowest wick. You're going to see that you're missing out on your third touch, yet the market gave you a nice move up, right? Now, how are you supposed to draw it? Remember, we said lowest wick at the first point, then as touch through as many wicks as possible. In this case, there are 2 wicks here. And you can clearly see that we are getting the third touch and we won't miss our trade. Now, we are talking about minor trends being created in this trend, right? Now, if you can see the market after touching it, it gave me this high here, then a low, then a high. So it came back down, right? The market came back down here and then gave me a little high here. This can clearly be observed in a smaller time frame. But I'm trying to show you that I have a high here and I have also, when the market came down, it closed here. So I have a high here. So I have a trend line in this case here from this high and this high here, right? So this is a very steep trend, but how can you identify, how can you be able to clearly see it? You can clearly be able to clearly see it in the next lower time frame. For this case, I'm in weekly. I'll just go to daily, then I'll adjust my trend. So you can clearly see this, the trend that we drew in weekly. So this was the first touch. We consider this a second touch. So we're interested in the third touch here. Now I'm just going to adjust my trend line that I drew, the minor trend line. You're seeing this. So I'm just going to adjust it like this to match this minor trend line properly. And you can clearly see. Now, we say that we're not interested in taking this trade. You can clearly see the market reacted here, tried to break, reacted, it was rejected. You can clearly see also it came here, tried to break through, it reacted, and that's when it came and touched here. So meaning that there's a minor trend here, right? So when are you interested in this trade is when the market breaks here. And you can clearly see that the market gave us a smooth move, gave us impulse, retracement, and impulse, right? We have a video about impulsive moves. You can look through our videos and Fibonacci retracement tools, and you'll be able to know how to trade such movements. So this is another point that you should be able to put into consideration so as you can avoid the mistakes that you've been making and you become a bit profitable, right? So let's continue with our list. Okay, so we have so far looked at 3. Now let's go to the 4th one. And what is the 4th one saying? The 4th one is saying not using the minor trends that the market creates. This one I've already explained it within the other one. Where the first one was about the market creating trends within the main trends, and then not the 4th one was not using that trend line, right? The 3rd one was about acknowledging that we have minor trends within the major trends. We're majorly focusing on the major ones, but the 4th one is saying that we should also use the minor trends that the market has created. So you have to make sure that you have another trend line within that trend, right? So let's go to the 5th one, and then we'll be able to look at what are the mistakes. Now, the 5th one is you people are drawing very many trend lines on your chart. You're going to see in very many videos, you're going to be told that your trend line can be adjusted. You can move trend lines. You can have more than one. You can have more than this. You can have 3 and all that. That is not right. You're not supposed to be having trend lines all over the place, right? Let me show you what I mean by this statement. Theoretically, then we head over to the chart. For example, people say that when the market has, when you have a trend line like this, let's say this is, let me just redraw this. Let's say this is your trend line. The market is creating turning points here, right? Now, when the market creates other highs, higher highs and higher lows within here, and then you can have another trend line here. Then again, when the market breaks below, then creates another one, you can again have another trend line. This is not true. What is causing this scenario is, is point B. You don't know how to identify, or you're ignoring lower lows and highs, right? Or you're not correctly marking the lows and highs. That's what is causing that. So you'll find that your chart has 10 trend lines, 5 trend lines, 6 trend lines, 7 trend lines, and making decision becomes very hard for you. Are we together? So you have to make sure that you're putting all these aspects that we have together so that you can avoid this aspect. I'm just going to show you this. That's a very wrong perspective that most videos maybe you've come across, they speak about. That is not correct. Do not have your trend lines all over the place. Either there's a trend line or there's no trend line, guys. This issue of saying that another trend has started, we're still an uptrend. How can you tell me that another trend has started? Just use that logic. Let me just give an example. Imagine we're an uptrend, right? So how can you tell me that another trend has started? If another trend has started, I expect it to be a downtrend. Are we together? So if the market has shifted away from this, most likely it has created a very higher high, and another principle has to be applied, not specifically trend lines. Do not force the market, guys. That's another thing that is costing you traders. You're trying to force things all over the market, all over your analysis, all over your charts. You're trying to bend rules here and there, and then you end up losing a lot of money. Let me try to show you this practically on the chart. Okay, so we are on our chart, and I would like to show you how that issue comes about of having multiple trend lines and why you should avoid it. Now, let's just identify an area on the charts here which could cause that issue. One of them is actually this one which we've already looked at. For example, if I had this first turning point and then this second turning point, I'm assuming this movement here has not yet happened, this movement, right? Because this one we're doing it on a turning points that have already happened, but assuming that we just assume that this point has not yet happened. You will first have a trend line. You mark this first turning point, then you mark the second turning point, this one here. This is the second turning point that we are considering, this one, right? That one. Now you have your first trend line. Now again, when the market comes and creates this turning point here, most of you are going to do something like this, and then you have your second trend line, right? But I just want you to look at the principles. You're not applying all the principles here, and still you have 2 wrong trend lines, right? That is one aspect, right? Why are you having all this? This is the same trend. The market is making higher highs and higher lows. You just have to identify the correct turning point so that you can use it to your favor. Another area that I can identify for you is this area here. For example, you will have your first trend line like this. Some of you would draw it like this. Some of you would draw it correctly like this, right? So you have your first trend line here like this. So you will not be contented because you don't have a third touch here, because you want to force the market. What will most people do? They will have another trend line like this, right? Having 2 trend lines in the same place, right? But actually this first trend line that you drew, this trend line here, is correct. Why? Because look at how the market behaved. You followed all the rules, highest turning point, then more weeks on the second turning point. What the market do? The market broke the trend line and retested it perfectly, then gave you a push up, right? So make sure you do not have your trend lines all over the place. Make sure you're organized about it. It's not always that the market is going to be in your favor. Are we together? The market is not always going to be in your favor, or that the analysis you're doing should always be perfect or should always align with price. You're not done moving the price. So always just follow the rules, the correct rules of how you use the tools, and then leave the rest to price, and then you just react to it, right? I've showed you how you can avoid that is by correctly knowing the laws, right? For example, in this case, the market created this high, then came and gave us a significant low here, right? Then gave us a lower high, right? Now, the market again came and gave you a push down here, right? Of course, this was a reaction to this low. Now we have this turning point and this turning point. That's why this first trend line was the correct one. And then price came and aggressively broke above this trend line. What caused it? The double bottom here, and also clearly reflects in a bigger time frame, right? So that's why normally I do advise top-down analysis so that you can be able to see the bigger picture before you come to the smaller time frames, right? So that's another mistake that you should avoid. Do not have trend lines all over your chart. Yeah, I know you've read somewhere or you've been told that, but you've proven it for yourself that it is not going to work for you. Avoid that. It's not true that you can have very many trend lines and use them. So how are you going to make your decision? You will have your answer right there. Okay, so far we are on our fifth reason. Now let's look at the last reason why your trend line will never work in case you're doing these same things, right? If you keep doing them, forget about your trend line being accurate, and you keep blaming trend lines, keep saying they don't work here and there, but the fact is that they do work. Now, the last one is aiming for perfection. Traders love perfection. I know it's human nature that when you do something and it happens, you become excited. Now, this is the reason as to why you see many traders posting. I called for this. I said this would happen and it happened. I did this analysis and it happened. We're aiming for perfection. That is not correct. Do not aim for perfection, because I gave you a reason that you're not controlling these prices or the price movements, and the lines or the slabs or order blocks, whatever supply and demand that you're identifying or drawing, it's not what moves price. Price is moved by very many factors. So do not aim for perfection. And what do I mean by perfection? I've already showed you one of the things is we want to use the wicks. We want the wicks to be touched perfectly. We want to have our lows being touched perfectly. So for the aspect of trend lines is we want to touch the wicks perfectly. Or if most of you even go ahead and totally be wrong, you decide to be totally wrong by using line chart to draw trend lines, which is very, very wrong. Closure of price using the line chart, or opening of price, which is wrong, right? You draw it and then you draw it using the turning points, and you want to be perfect. That is not how trend lines are drawn. Trend lines, we are looking for the best fit. If you guys had a chance to go through the education system and you studied what we call correlations, especially those who did sciences, either maths or economics, you realize that there's what we call in correlations. Now in correlations, there's a part of plotting points, right? Or if you did statistics, that part of population whereby you're plotting those points. They tell you to just mark the best fit. But if you're to join all those points, you're not going to get a line. You're actually going to get something like zigzag. You're going to get a movement that is not understandable. So do not aim for perfection, right? Having looked at all these aspects above, do not look for perfection. Just apply the rules. Lowest point or highest point. Then on the second turning point, you're just looking for at least touch as many turning points as you can, right? Then wait for the price to come and react on the third touch point. And in most cases, as we spoke about it in our trend line video, we have a whole video about trend lines. You can watch it. On the third touch point, we're looking for either a pattern, we're looking for a structure that the market is going to give you. Most of you also just want to wait for a candlestick pattern and you take the trades, which is very, very deadly. That's what is making you guys have bad entries, bad risk to reward ratios, or even sometimes blowing your accounts. Actually, most times, not sometimes. Because when the market comes to the trend line on the third touch point, you want to take the trade immediately. So do not aim for perfection, and you can avoid all these issues, right? So if you correct all these things and implement what I've showed you guys in this video, you'll see your trend lines starting to work, right? So if you're new here and this is your first time watching our videos, please, we do post such videos every week, once or 2 times a week, and they can do help you in your trading. You can smash that subscribe button and turn on the notification so that you do not miss out any of the videos. And if you found value in this video, please do not forget to click that thumbs up button or the likes button. It helps us push the algorithm, right? So that is it for today, and have a good time.